Hi, welcome to the Market Alert for Friday, the 7th of November 2014. And starting off with the pre-market session, you can see the market was fairly quiet until all of the 1:30 high impact news items hit the market. And you can see their positive response from the Dow there to buying bars, followed by a selling bar, another buying bar, and then some selling pressure coming into the market, and then the market returning back down to the previous day's high. So the market's breaking through the previous day's high with the economic news that was released at 1:30. See the market's reaction there at 2:30 when the market opened, the buying followed by selling, buying, and again selling pressure coming into the market followed by selling, and then they tried to test the market there. Let me just move the chart over to the left a bit. So these blue bars are testing bars, and what I'm going to do next week is actually put individual videos together of all of these different coloured bars and explain what they are, why they appear in the market, and also where they appear in the market. And once you understand these bars, you'll be able to read the market bar by bar as the market unfolds. There's a certain phase that the market follows, and by the time you've completed all of the videos, you will have a full understanding of why the markets are not random at all, but are actually fairly predictable. So all of these different coloured bars will explain all of them and where they appear in the market cycle, so that you can actually use them in order to read the market. And not only that, but also to trade as well, and in particular this type of bar here where we see the market trading through the psychological level coming back. This is the professional money just testing the market to see if anybody really wants to sell, because we started off selling here, the market was tested here, but nobody wanted to buy after, so the market drifted lower. You can still see at the bottom there the volume is above the average line, so there's still some sort of selling around, but not as great as it was at the first part of the session. So green buying, red selling there, and there's a few nuances in between as well, which I will explain to you in the video tutorials. So here we see the market being tested. We know there's no more selling around because the next bar is low volume, so the market's free to move higher. We're also testing at the psychological level of 17,450, no more selling, and the market's free to move higher there. So getting back to the automatic interpretation in the market by the signals, we're late afternoon, 10 to 5, we get a sell signal there. We can see the market put in a PTP and XXX. And again, this sell signal isn't below the psychological level, this time of 17,500, which isn't always a good idea to have a sell signal, or an entry point I should say, that's above a psychological level. You can see there the market only goes to the entry price, and then this is reversed with a buy signal. So you would reverse the position at this stage, and then you can see if I just remove some of these lines and leave just the entry prices, you'll see you're around a 15-point loss there. It says 12 there, but you've got to take into account the spread as well. So the first one gives us around 15-point loss, but a fairly quiet time in the afternoon. As you can see, the volume has just been petering out there, dropping off markedly. And it's more or less the same picture as well. You can see there as we continue throughout the session, but the good thing is we do get a few bits of buying along the way as well. So we're in this situation, you can see the market eventually rose and traded up to the psychological level. Well, there's a surprise. You know, I keep going on about this, but that's what the market does. This is the Dow. This is how it trades. So again, as you saw in one of the other tutorial videos, how I traded up to the psychological levels to take the profit. So around here you're looking around 22 points as a max there, and then the market just drifted sideways and became quiet once more. So a fairly quiet session after the initial news there, where you see the market then gather itself and move back to the upside. And in fact, between here and here is only 50 points and 75 points max, so again still at a narrow range. And on the overnight, the market's been fairly quiet, still trading and making new all-time highs. The insanity continues at 5:05 this morning. We've got the market putting in a high of 17,592, nearly at the 17,600. And like I say, the insanity continues in this market. We've got a really good look at this in the daily chart. You can see this is actually what's known, we went through the V-shaped correction the last couple of weeks, and of course we've taken out the recent high to create a new all-time high. You can see we've got a new all-time high on the cards at the moment. We're heading for 17,600. But this rise is what's known as a parabolic rise. It's a rise without any pullback, and the volume is low. It's just getting less by the day. This is not sustainable, and it's a matter of time before this market shows or puts in another correction. Let's just have a quick look at today's news before we have a look at the implied volatility, which will give us the indication. Now we've got some really interesting news out today. 130 non-farm payrolls are out. Used to be called that's what it used to be called. They're now called non-farm employment change. We've got the unemployment rate, of course. Now Yellen is speaking at 3:15, and I can't emphasize enough that you should not be in the market at 3:15 when she does speak, because we have no idea what's going to happen, what she's likely to say. But we've got this massive rise in the background. In fact, let me just measure that and have a look, see how much this market's actually come back up in the last few weeks. So from the low to today's high, we're up at 1,700 points. That's a massive move on the Dow there. So you don't want to be in at 3:15. The market's likely to be volatile. It'll turn around, and then it will probably go on to make a new all-time high. It looks like we're heading for 18,000 before we see another correction in this market, because that's what the Dow has tended to do throughout the last 6 years. You've seen this before with all of the V-shaped corrections, but we are due for a correction. Let's have a look at the implied volatility, which is the best indicator on when we are likely to see a correction in this market. So we're down to 10.80. We're headed in the right direction for another correction. You can see the last one here when we got down into the lows of the implied volatility, what happened. This is a very quick pullback in this market. The historic volatility, of course, is going to lag somewhat, but the implied volatility is the measurement of risk by the option sellers and gives the best indication of what the market is likely to do. And this needs to come down a bit more. The low of July that we had of 7.9 would be fantastic to actually see that happen first, around 18,000 on the Dow, if not a bit higher, and then we know we're in for another correction in the market there. Right, well, that's it from me for today. Also for this week, I will speak to you over the weekend, a quick weekly review of what's happened in the markets. Have a great weekend. As ever, thank you for your support, very much appreciated, and I'll see you on Monday. Thanks for watching. See you soon.